Hello and welcome to our discussion on financial statements. We'll continue with our understanding of financial statements, and we'll continue with the example of the Apple computers. We will see this that we have 3 years financial statements in $1,000,000 of Apple computers from 11, 12 and 13. In the previous discussion we saw whether the company is using any short-term sources to finance its assets, and in this session we will understand another question, try to find an answer to another question. Is the company is using long-term sources? If yes, which source? To answer this question, we converted this balance sheet into condensed balance sheet as we discussed in the previous session. So converting the given balance sheet into the condensed balance sheet will actually give a very broad overall picture about the sources and the corresponding assets. So with this balance sheet, let us first find an answer to this question. To do that, maybe we have to find capital employed. Capital employed is a summation of the debt and equity, the long-term debt and or non-current liabilities and equity. The capital employed is also called the long-term sources, which consists of non-current liabilities and equity. So in case of Apple, 163,000 million is the capital employed for 2003, and we can see that about 79% of the business is financed by the capital employed. In other words, the company is using long-term sources to the extent of 79% of the total sources. This is the case with the previous year also. Let us observe that. Over a period of time, the long-term sources accounts for more than 75% of the total sources of Apple. And in the year 2013, it has gone up slightly, maybe because there is an increase in the non-current liabilities. And let us see what is this non-current liability. We can see that a significant increase in the non-current liabilities is due to the long-term debt that Apple took in the year 2013, which was not there. There was no long-term liabilities in the previous year, but there's a long-term liabilities or long-term debts in 2013. Maybe later on we will try to understand and observe why and how this, what did the company do with this long-term debt and what is the source of this debt. Now let us understand that this capital employed consists of two components, so therefore it is better to understand the components of it by undertaking the debt equity ratio. And the debt equity ratio is the ratio between the composition of the debt and equity, the long-term debt and equity. So we can see that the debt equity ratio of Apple is less than 1. A significant part of the capital employed is equity. So Apple is a out and out equity driven company, and the debt equity ratio was definitely much below 0.32 in the previous year, because in the current year 2013 they have taken they made a huge borrowing, which is the long-term debt. And let us see what percentage of the business is therefore funded by the equity and funded by the long-term debt. The business funded by equity is 60% on, and that is more or less same. You can see that all through 11, 12 and 13, the percentage of the financing of the business by equity was about 60%, and it was 66 and 67 the reduction in the year 2013 not because the equity has gone down, but because the debt has gone up, and the debt has gone up because they made a borrowing of long-term debt, and the long-term debt to total assets is in the range of 10 to 19%. So increase in the debt financing in the current year is because of this particular long-term debt. So overall, Apple uses the long-term sources, and in the long-term sources is the equity, which accounts for a significant part of the total financing by long-term sources. However, in the latest year, the company has taken a significant amount of long-term loan, which is $16,960 million. So what did they do with that money? Maybe it's an acquisition of asset, maybe because of some long-term investment, which we'll examine when we see the asset side of the balance sheet. So capital employed and debt equity ratios are two important financial items which can actually help us in answering this question whether the company is using long-term sources or not. Thank you very much.